Yo, Mark Super here. In this video, we're talking about the question I've been hearing from subscribers about whether I should buy Hyliion stock now or wait for a dip, and specifically, just in general, when to buy a stock and why conviction is so important. Let's get into this. Before we jump into this video though, don't forget to smash on that like button. It really helps this content, helps other people see this video. And if you haven't already, consider hitting that subscribe button. It's free to do, and I'd really appreciate it. Okay, well, let's get into this. So conviction to own a stock is so important. So let's first talk about buying Hyliion stock now or waiting for a dip. So the fact that the stock has been going up, does that mean the stock will continue to go up? Maybe in the short term, maybe not. In the long term, who knows? So that's not necessarily a good indicator. Whether it goes down, maybe? No, it could keep going down, it could go up, or whether a stock is just going sideways. It's still, again, the same story. We don't know what that means exactly. We can, of course, look at the technical analysis of this stock to give us an idea of, on average, what we would expect to see in terms of price action in the short term. But again, that is more short-term perspective of where that stock might be going. And if you're thinking about being a long-term investor in a stock, that's not too helpful. So what are the ways to look at stocks and when to buy a stock? Well, one way to look at a stock is the valuation. What is the current valuation of that stock? Is it a reasonable valuation? And comparing that valuation and the stock in general in the company to other companies. And why is it so important to compare it to other companies? That helps to derive its value. Every asset's value in general is derived from being compared to other things. So just like in real estate, if you're going to buy a house in an area, you'd want to look at the comparisons in that area to see, oh, this house next door was just sold for this price, and okay, so this house might be a little bit more expensive than I'm thinking about buying because they had an upgraded kitchen. And also, well, how has this location been doing in general, like over the last 10 years, let's say, because I want to make sure it's an up-and-coming community where I buy this house. So these are some of the things you might want to look into, because comparisons are everything. So let's go back to stocks. I think conviction to own a stock is the most important thing for me to own a stock. And what do I mean by conviction to own a stock? So let's clarify what conviction to own a stock is for me. So conviction is a derivative of things like the future prospect that you see in the company, the valuation in the future in 5 to 10 years, why that valuation is going to be a higher price than the current stock price now. And it's going to always be more. And because of maybe it's because of the revenue growth, maybe it's because of the market cap valuation that you see that it's going to be in that future, and all these data points that you put together to find that valuation. And the other points you might want to look at is this company a leader in this industry? Is it a best of breed as well? What are the advantages that this company has compared to the other companies that exist there? Or is this company a first to market in this area space? And what are the barriers for other companies to entering this space? And looking at all these things will help derive your conviction to own a stock. And another thing to look in terms of your conviction to own a stock is the CEO, the management team, the company culture. Are these things that you can back and that you believe in? So all these factors that I just mentioned equate to this conviction to own a stock. So once you have your conviction to own a stock, you just close your eyes and pray for the best and see what happens when you open your eyes and after the waterfall has occurred, and see where the cards lie in the end. No, I think that your conviction should be more of an agile process. You keep iterating over, you get this new data and new information that comes out, or new news about a stock and a company, and you put that into your equation and then find out where the cards end up iteratively. So definitely have this constant process that's going through and through to make sure you know what your next action is going to be and what your consequences are going to be of some stock changing in a way that you didn't expect necessarily. So for example, the company cut their dividend, for example, maybe you'd stop the dividend drip altogether and you would want to reinvest that in a different company. Or maybe you'd stop buying on the dips for that company because you don't want to be buying in a company that cut their dividend. Maybe you'd sell a portion of that stock. So there's a variety of actions that one might take in response to something that happened, depending on the varying degree of concern that that company had made. Now, talking about when to exactly buy a stock is very subjective and not really a clear-cut place to buy a stock. So that's why I'm saying conviction is so important, but I'll tell you a little hint about, for me, what works best for me in terms of not necessarily the best plan overall, but in terms of my historical performance and purchasing of stocks in the past that end up leading to the most lucrative results. So for me, actually, having strong conviction to own a stock, so every stock is going to be a varying level of conviction, obviously. Not every stock is going to be 100% conviction. So if you have a strong conviction in a stock and the stock price is high, that have led to the most interesting and lucrative outcomes for me. Why is that? An example is if I bought a stock at a very high level. So let's say I started out my position when the stock was very high. I bought in with 10% of my position that I wanted to build out, or 5% of my position that I wanted to build out, because also I knew it was very high, so it doesn't make sense to do a lump sum necessarily at that high price. So I bought into the stock, maybe it went up a little bit more, and I was dollar cost averaging. I'm starting to build out my portfolio, and then the stock just crashes down and goes down, 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 and I start buying more and more and more. And I'm buying more because the news that's coming out around the stock is not really material. It's more short-term news, maybe. Maybe it's not impacting my story and my bullish thesis around the stock. So I keep adding more to my position. I'm building out my position to get to my 100% of the position I want to build that position out into. And so it ends up being something that if I believe in the stock and if I end up being right about the stock eventually goes up over time and I make a lot of money there. An example of that is Tesla stock, where that happened. And I bought in at a very high price initially, maybe around 2 years ago. I bought in at a very high price, but then it went down a lot. And one reason why the news that came out for Tesla didn't worry me too much is that it didn't do two things. It didn't A, lose the trust of Tesla customers, and B, it didn't lose the trust of Tesla shareholders. So for example, if you look at Boeing's MAX problem lost the trust and revenue of customers. So they lost trust in Boeing. So that was a big problem. And then B, the shareholders lost trust because of the lack of transparency from management. And don't get me wrong, I think Boeing is interesting because the bullish thesis around Boeing that people have, but harp on too much, is that, oh, they're too big to fail. They're too important for the government not to bail out. And I do think this is true to a certain extent. So I actually bought in, have a cost basis around $170 because of this thesis of, yeah, they're going to do good. They're a massive company and they're not going to fail. But at the same time, it doesn't mean that they can't drop their price by 50%, by 60%, like we saw. It went under $100 a share at one point. So it doesn't mean that the stock is impervious, even though the company is, quote unquote, too big to fail, that the government's going to bail them out. So these are all true things. So it's good to update your basis of what you're thinking about Boeing or any other stock to think of why I should update my conviction to own a stock, and maybe some actions to take. And that doesn't even include the whole virus and how that smashed and decimated the stock as well. And you have to add that to your convictions. Every new piece of information, you need to add that to your conviction to own a stock, regardless of what it would be. And it would be kind of foolish to just be blindfolded with your initial conviction before the MAX problem, before the virus, and be like, okay, I don't care what happens, because these are material things that are happening, unlike what happened with Tesla with the concerns of demand issues, when Tesla clearly said, well, actually, it's because of logistical problems to Europe for the first time. And in addition, there's seasonality issues of Q1 in general. So moving along here, what happens when I buy a stock at the bottom instead of buying a stock that's more at the highs? When I buy a stock at the bottom, at the very bottom, that initial investment will definitely do very well. But the problem here is two things. My position might never be built out. The stock will start going up and climbing up, and then I will start to buy more and more and more, but the stock will continue maybe to climb up and up and up, and that will price me out mentally, because I actually have an issue, and I know it's an issue of mine, to keep buying stocks as they go higher and higher and higher. And so I'm more inclined to buy a stock when it keeps going lower and lower and lower. That's easier for me. So I have an issue to keep buying stocks as I keep going up and up and up. And knowing that I have this issue, well, it's only an issue because I want to keep buying stocks, is so I have automated ways that I keep investing into the stock market no matter what. Regardless of what I decide to do, it's just going to be happening all the time without me thinking. Just know what your weaknesses are in general, and so set things up in a way that helps you tackle those weaknesses that you might have as an investor. So definitely let me know what you guys think of this conviction idea. Do you agree with it, disagree with it? And what is your game plan when you buy stocks? Do you like to buy stocks when they're just at the bottom? And are you able to keep buying when it goes up? Or do you like buying stocks when they're higher and keep averaging down and building out that position to a massive position? Well, let me know what you guys think in the comments below. And thanks for watching. Another reason why conviction is so important is because if you're just copying other YouTubers and what their investments are, or copying Warren Buffett and what his investments are, when the stocks start going down, if you lose your conviction and because you didn't have any to begin with, you might start selling off your positions for a loss and not understanding that this is a great opportunity to buy. And this is the main problem I see when just listening to another YouTuber or Warren Buffett or a famous investor and just copying what they're doing and not understanding why this is the time to either buy or sell, because you also have to be aware of what's materially happening with the company and what is the fluff in the background and when is a good opportunity to buy.